Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we're looking for multiple 1-2s, each of a lower Elliott Wave degree, looking for a blue 1, a blue 2 and then continuation to the upside where eventually we're going to be looking for a bigger wave 3. Now in this scenario, each wave 2 was a deep retracement, which is also what you like to see in a wave 2, as usually they are relatively short and deep retracements. Now if we compare the wave 2s in time, then the yellow wave 2 is a little bit shorter compared to the red wave 2, but that is no problem because as mentioned, each new color is a lower degree Elliott Wave count, so actually preferably they are the same length or shorter, which is fine. Wave 2 is a little bit shorter, and the green wave 2 is the same amount of time as the yellow wave 2. If we compare the impulses in time, then the yellow wave 1 is a little bit shorter compared to the red wave 1 as it reached a 0.786 fib time, but the latest bull market here, which was the green wave 1, was exactly the same amount of time compared to the yellow wave 1, which is also fine. But based on this information, yellow going to the 786 and green hitting the 1-to-1, we can get an estimation for an all-time high being the blue wave 1, where if we look at this blue wave 1 being the same length as the green wave 1, then the 1-to-1 is an interesting target sitting at October 2025. And if we take into account the 0.786, that one is sitting in March 2025. And just for a little bit of leeway, the 0.618 on the chart, September 2024. Now, if we then also look at the price, then what you can see is that each wave 2 is getting deeper from a Fibonacci perspective. The first one retraced to the 236, second wave 2 to the 382, and the green wave 2 retraced to the 0.5. But also each of the highs, each of the wave 1s are becoming shorter in price on a logarithmic scale, that is, where the yellow wave 1 went to the 0.618 trend-based fib extension taken from the low to the high of red 1 to the low of the red wave 2. But the green wave 1 is again shorter than the yellow wave 1, as the green wave 1 reached the 0.618 of yellow. Now with this in mind, we can then also get an estimation price-wise for the blue wave 1, which is then between 100k and 176k. If we compare the current move to the upside from 15.4k with previous bull markets, for example the bars pattern here of 2020-15, then you can see that price is pretty much following the bars pattern to the upside. And also if we follow the beginning of the bull market here in 2019 with eventually the COVID drop and continuation in a wave 3, then also here regarding this bars pattern, we are doing a pretty good job over here following the bars pattern to the upside. There's a little bit of extra confluence for a potential bullish scenario here. If we then zoom in to this structure of the chart, the green wave 1 and the green wave 2, then this is the subdegree count of wave 1. 1, 2, 3, 4, 5, finishing the green wave 1. Green wave 2 is also finished, which then has to be a WXYXZ over here, which is a very rare corrective pattern in general, especially on the higher time frames. But in this scenario, we are looking for this to be the low and continuation to the upside in a wave 3, where we are now currently working on a bigger impulse and of course new all-time highs to come, as that is what we're looking for in this scenario. If we then go to the daily time frame, then I have two scenarios this time. The first one is a double 1-2 Elliott Wave bullish scenario where we're looking for a wave 1 running flat in a wave 2. Running flat is always a rare corrective pattern as well, where this wave 2 retraced to the 0.382 taken from the low to the high of wave 1, which is also a less common target for a wave 2, as preferably a wave 2 retraces to the 0.5 to the 786 area. So this is less common, not great for the probabilities. It is possible in a very bullish environment, right? So it's definitely still a target, it's just less common. Then we're looking for a blue wave 1 here to eventually end, after which we're going to be looking for a blue wave 2 and then continuation to the upside where we're looking for a blue wave 3 and eventually much higher targets to come, where for the green wave 3 you at least want to hit 50.1k, but that is then after we have the 1, 2, 3, 4 and 5 of blue finished. A wave 3 can extend to much higher prices, so the green wave 3 can extend to much higher prices, which is actually also in a bullish scenario than what you're going to be looking for. Now, As we don't yet really know what the high of the blue wave 1 is going to be, it is difficult to give really like a price estimation for the wave 2 over here in blue. But just, if price is going to move to the upside, we're going to move these fibs to the upside as well. And these are taken from the low over here to then the high that price is going to make. And eventually, if we are going to get a bigger retracement, this is the area to look for, the 0.5 to the 786, with the 382 being less common and the 886 also being less common / rare for a wave 2. Now there's one important line on the chart though, and that is the 1 over here, the 1-to-1 trend-based fib extension taken from the low to the high of green 1 to the low of the green wave 2. Because in a double 1-2-1-2 scenario, preferably the lower degree second wave 1 is shorter in time and price compared to the first higher degree wave 1. But if this pump is going to continue and reach 40.5k, then this second wave 1 in blue is going to be longer in price compared to the higher degree wave 1 over here. So the blue wave 1, is going to be longer than the green wave 1, which is not really ideal in a double 1-2 scenario. So that is something to think about. And just because of the potential to go above this line over here and continue to the upside, I also have a second bullish scenario, which is this one over here. Now in this particular scenario, we are going to be looking for price to continue ranging in this range over here, which are the volume profile levels of this 2021 volume profile, the value area high, the point of control, and the value area low. So instead of just breaking it to the upside and then a 1-2-1-2 boom, instead we're going to continue ranging in this for a while before we get a bigger impulse. So in this scenario, what we're looking for is a wave 1, 2, 3, where the minimum requirement for wave 3 is to be longer than either wave 1 or wave 5. Wave 3 cannot be the shortest wave, but if this pushes a little bit higher to 40.5k, then this wave 3 is already longer. We're looking for a high in 3, retracement in 4, point of control is interesting. Then we're looking for a wave 5 to the upside, where the value area high at 49.5k, 50k is an interesting area of interest. Also the 786 from the all-time high to 15.4k is sitting around this area here. And then we're looking for a wave 2 to the downside, where basically I'm looking for price to go back to the low of this range, which is an important support resistance area here. Also the value area low. And if price can make it to the value area high and then reject for the green wave 2, the 0.5 is in perfect confluence with this area as well, because these fibs here are taken from the 15.4k low to the high that I have over here, giving you nice confluence between the 0.5, the support resistance area is the white box, and the value area low. And then we're looking for price to move to the upside. And you can also imagine from a psychology point of view, this would be very interesting, as people are gonna look at this pump to the upside and think, fuck, I'm going to miss out. We're going to go, we're going to go for all-time highs. People get greedy. The greed scale is going to go into 95 plus or whatever, 99, right? And that is the moment where everyone is buying, buying, buying. And that's then the moment to reject to the downside. Could be very, very interesting indeed. If you then look at the bearish Elliott Wave scenario on the cycle time frame, then we are looking for a wave 1, 2, 3, 4, 5 already finished in a red wave 1, and now we're looking for a multi-year wave 2 to the downside, where the normal targets for a wave 2 don't work on these very, very high time frames, because then the 0.5 to 786 would be a common target, $400 for one Bitcoin, right? So what I'm looking for here is this low to hold as a minimum, and the 0.236 to be the maximum target, just like this retracement that we have over here. This retracement went to the 0.236 Fibonacci as well. So on these higher time frames, that's absolutely normal. It might not even hit the 0.236, but it is sitting at 6,100. Time-wise, for this wave 2, the 0.382 is always an interesting time area to keep in mind, which is sitting at September 2025. And eventually, we then want to see continuation to the upside. If we look at the macro bearish scenario here, then we are looking for the high being made, right? The high is in the red wave 1 over there. And we are now looking for a multi-year bear market to the downside, where this is only your wave A. Instead of a WXYXZ for a wave 2 and continuation, we have a wave A looking for B and eventually a wave C to the downside. Now, I have been talking about the resistance of this wave B for a very long time, and finally price has reached it. We have the golden pocket over here taken from the high to the low of this wave A with the point of control, which we just passed here as well, right? We're now above the point of control. Then we have the value area high in confluence with the 786 between 48 to 50k. These are my two main areas of interest for the high of a potential B. And then what we want to see is a rejection to the downside, where we're going to be looking for a low in a wave C. So a sharp move, quick move, 5-wave structure to the downside preferably, where the golden pocket taken from the low to the all-time high is in perfect confluence with the value area high of this multi-year volume profile. So that is a very interesting area of support between 11k and 8k for the low of a C, and then we get the continuation to the upside. Now if we then zoom in to the daily time frame that would work with this particular scenario, then we have to think about a 3-wave structure to the upside in the bigger yellow B, right? We are looking for the yellow B for then a C down, so we're looking for a 3-wave structure in B. And in this case, we're going to be looking for an ABC or a WXY. Now the 0.382, which is less common / rare for a wave 2, is common for a wave B or a wave X. So that increases probabilities for a potential B or X and a move towards the downside, where for me an ABC has a higher probability compared to a WXY, but I do like to have both on my chart. Now what we're then looking for is the high of a wave C. What is important is that on the linear scale, which is what I have now, the target area for this wave C here is between 40.4k and 44.1k. That is the most common target area for a wave C. Less common target area for a wave C is the 1.618, which is sitting a little bit higher, of course, over here, sitting at 50k. And then we get again confluence with the value area high, the 786, remember, all around that area. So also that is still an interesting target for a potential wave C. Now for a wave C, we want to see continuation and a rejection, or going to the 1.618 and then a rejection to the downside. While for a wave Y, we then have to count this as an ABC, corrective structure X, and then a double zigzag, another structure to the upside, which at the moment for me has a lower probability, so I won't really talk about it in a lot of detail. Now for this wave C, you also see a fib time on the chart, the 0.618. Usually a wave C is around the same time of a wave A, can definitely be shorter. Usually it's between the 0.618 and the 1.618, which would be long in this case, the 1.618, so preferably it ends between the 0.618 and the 1-to-1, with the 0.618 sitting at the 9th of December this year, and the 1-to-1 is sitting on Friday the 2nd of February next year, 2024. Now, if we then toggle on the logarithmic scale and look at the logarithmic targets for a wave C, then you can see the targets move towards the upside for a wave C. Now the 1-to-1 is sitting at 50k and the 1.236 at 59k. So also this is still a target area for a potential wave C on the logarithmic scale, right? So basically that whole 40 to 50k area, or even a little bit higher, is also still a target area for a wave C, making it relatively difficult to judge exactly if we're in an impulse or an ABC to the upside, as we have to wait for the rejection that we eventually get. Is it going to be a 3-waver and then continuation, or is it going to be a big impulse to the downside? That is yet to be seen. Now, if we then finally look at the probabilities of the different scenarios, then just because price over here is bouncing on the 0.382 taken from the low to the high on the high time frame, it automatically usually gives a little bit higher probabilities for an ABC, because the 382 is less common / rare for a wave 2 and more common for a wave B and a wave X. And we also have a running flat here, which is something you don't really see often in a wave 2. Generally on high time frames, you don't really see that often, but especially wave 2s tend to be short and deep, like a zigzag for some example. So that is something we do have to keep in mind. On the cycle macro, it's basically all about the reaction we get between 40 and 50k, right? We have to wait and see how price moves towards the upside, and as price is moving towards the upside, we will observe what happens on the lower time frames, as I do in the daily updates, and then based on what we see there, we can look for a rejection eventually, as we do expect eventually a bit of a move towards the downside, and then based on the structure that we get, we can really dedicate probabilities to the macro bear, macro bull, or the cycle bear and the cycle bull, right? So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.